Welcome back, everybody, to ScamWise. Ready for another deep dive? Today, we're going deep into the world of cryptocurrency.
Ooh, crypto?
But not in the way you might
Yeah.
think. We're not going to be talking about the latest meme coin or market trends.
Right.
Today, we're getting into the nitty-gritty of how scammers are using crypto to dodge taxes.
Ooh,
And believe me, some of these tactics are straight out of a spy thriller.
you're not kidding. Crypto's unique features, especially its pseudonymous nature, have made it a bit of a haven for those looking to avoid the tax man.
Okay, so for our listeners who might not be crypto experts,
Yeah.
what exactly does pseudonymous mean in this context? Does it mean completely anonymous?
Not quite. It's more like a masked ball. Everyone's there, you can see them dancing, but you don't know their true identities. In crypto, your transactions are recorded on a public ledger called the blockchain, but instead of being linked to your name and social security number, they're associated with your wallet address, a string of random-looking characters.
So it's like having a secret code instead of your real name.
Exactly.
That makes sense. But how do scammers actually exploit this to avoid paying taxes?
Well, imagine you're trying to track someone's spending, but they're constantly switching wallets, moving money around like a shell game. That's essentially what scammers do. They create multiple wallets, scatter their funds, and make it incredibly difficult to follow the money trail.
That sounds like a nightmare for anyone trying to track them down. But hold on, aren't there companies and software that specialize in analyzing the blockchain? Can they untangle this web of transactions?
They can, and they're getting better at it all the time. There are some incredible blockchain analysis tools out there that use algorithms and machine learning to identify patterns and connections, kind of like digital detectives. But here's the thing. Scammers are fighting back with even more sophisticated tools.
Ooh, this is where it gets juicy. Tell me more about these tools. What are scammers using to cover their tracks?
One of their favorites is something called mixing services, or sometimes they're called tumblers. Imagine a giant pot where you throw in a bunch of crypto from different sources. The service mixes it all up, making it almost impossible to tell which coins came from where. When the funds are withdrawn, it's like they've been laundered, their origins obscured.
So it's like a digital money laundering scheme.
Pretty much.
That's pretty clever, I have to admit.
Mm.
Are there other ways they're making their crypto dealings harder to track?
Absolutely. They've also started using privacy coins, which are cryptocurrencies, specifically designed to hide transaction details. Think of it like sending a letter in an unmarked envelope. You can see that something is being sent, but you have no idea who sent it, who it's going to, or what's inside. Some popular privacy coins include Monero, Zcash, and Dash, each with its own unique ways of enhancing anonymity.
Wow, seems like they're always one step ahead. But not all scammers are tech wizards, right? What about those who try to hide their crypto gains the old-fashioned way?
You'd be surprised how many people still try to fly under the radar, hoping no one will notice. Some simply fail to report their crypto gains, crossing their fingers that the tax man won't come knocking. Others get a bit more creative, claiming fake losses to offset their income, or underreporting their gains to minimize their tax bill. It's like playing a dangerous game of hide-and-seek with the IRS.
Speaking of hide and seek, I think it's time to bring in a real-world example. We've got a case that perfectly illustrates this old-fashioned approach to crypto tax evasion. It involves a man named Frank Richard Algrren III.
Oh, Algren's case is a classic example of what not to do. He was actually the first person in the U.S. to be sentenced to prison for evading taxes on cryptocurrency gains. Between 2017 and 2019, he sold millions of dollars worth of Bitcoin, but conveniently forgot to mention it on his tax returns.
So he thought he could just cash out and live the high life without putting his dues. What did he do to try and cover his tracks?
Well, he tried to stay off the grid by using multiple wallets, making it harder to trace the transactions back to him. He even went as far as conducting face-to-face cash transactions like something out of a gangster movie. But, the long arm of the law always catches up in the end.
Yeah, he definitely learned that the hard way. He was sentenced to 2 years in prison in 2024. It's a stark reminder that authorities are taking crypto tax evasion very seriously. And it's not just about individuals trying to cheat the system. There are also those who exploit the fact that regulations surrounding cryptocurrency are still evolving and in some areas a bit unclear.
That's right. We're talking about loopholes, those gray areas in the law that savvy individuals, let's call them, try to exploit to their advantage.
So how are they using these loopholes to avoid paying their fair share?
They might use these ambiguities to delay their tax payments, hoping the rules will change in their favor. Or they might even shift their assets to countries with more lenient crypto tax policies. It's like a global game of financial hide-and-seek.
And I'm sure there are some high-profile examples of this, right?
Of course. Take Michael Saylor, the co-founder of MicroStrategy, for instance. He found himself in hot water when he was accused of falsely claiming residency in Florida and Virginia to avoid local taxes in Washington, D.C., where he actually lived. That little maneuver ended up costing him a cool $40 million in a settlement.
Ouch. That's a hefty price to pay for trying to game the system. It seems like no one, no matter how wealthy or well-known, is immune from the scrutiny of tax authorities when it comes to crypto. But these are just a few high-profile cases. Is tax evasion in the crypto world actually a widespread problem?
Unfortunately, there's evidence suggesting it is. A recent study on Norwegian cryptocurrency investors found that a staggering 88% of them failed to report their holdings on their tax returns. That's not just a few bad apples, it suggests a systemic issue.
Wow, 88%. That's alarming. It seems like a significant portion of crypto users are either unaware of their tax obligations or deliberately choosing to ignore them.
That's the worrying trend. It highlights the challenges authorities face in regulating this rapidly evolving space. It's like trying to catch smoke with your bare hands. So what can be done to combat this growing issue of crypto tax evasion? And more importantly, how can our listeners protect themselves and make sure they're on the right side of the law?
Those are excellent questions, and ones we'll definitely dive into after a quick break. Don't go anywhere, folks. We'll be right back with more on ScamWise.
Stay tuned. Welcome back to ScamWise. Before the break, we were painting a rather concerning picture of tax evasion within the crypto world. We talked about how scammers are using everything from complex mixing services to simply forgetting to report their gains.
Exactly. It's clear this is a serious issue, and I think many of our listeners are probably wondering what's being done about it. What are authorities doing to crack down on all this crypto tax evasion?
Well, they're certainly not sitting back and watching the coins roll by. One of their key weapons is blockchain analytics. There are some impressive companies out there like Chainalysis and Elliptic that specialize in tracing and analyzing blockchain transactions.
So even with mixing services and privacy coins, there's a chance these companies can follow the trail and catch these tax evaders.
You bet. It's becoming increasingly difficult, but these blockchain analysis tools are getting more sophisticated all the time. They're using cutting-edge algorithms and machine learning to spot patterns and connections that would be nearly impossible for a human to detect. It's like they're piecing together a massive puzzle, but instead of a pretty picture, they're revealing a criminal network.
That's fascinating, but it seems like prevention is always better than cure. What can be done to stop this type of tax evasion before it even happens?
Regulation is key. One area where authorities are focusing their efforts is strengthening KYC, or Know Your Customer, and AML anti-money laundering rules. Many cryptocurrency exchanges haven't been as strict with these rules as they could be, allowing users to trade large amounts of crypto without proper identity verification.
So it's like making sure everyone has a valid ID before they can walk into a casino and start gambling. That makes sense. But crypto isn't confined by loaders, is it? What about scammers who move their assets to countries with more relaxed crypto tax laws? How do authorities address that?
That's where international collaboration becomes crucial. Governments worldwide need to work together, developing treaties and frameworks for sharing data and coordinating their enforcement efforts. It's like a global game of whack-a-mole. You can't just focus on one country. You need a coordinated strategy to tackle the problem on a global scale.
I see your point. But we've also talked about how the decentralized nature of crypto, especially with things like DeFi, makes regulation quite a challenge. How do you regulate something designed to exist outside the traditional financial system?
That's one of the biggest head-scratchers facing regulators today. DeFi platforms, by their very nature, operate without intermediaries, which makes it tough to implement traditional oversight mechanisms. It's a bit like trying to herd cats.
So what can be done?
Well, authorities are starting to explore different approaches to bring these DeFi platforms under some regulatory oversight. One idea is to focus on those points where they interact with the traditional financial system.
It sounds like a lot of work lies ahead. But it's encouraging to hear that authorities are taking this seriously and working on solutions. But for those new to crypto, all this can feel overwhelming. What advice would you give our listeners to make sure they're on the right side of the law and not accidentally stumbling into any traps?
First and foremost, education is key. Take the time to understand the tax laws in your jurisdiction as they relate to cryptocurrency. Don't just assume it's the same as traditional investments. The rules are still evolving, so it's important to stay up to date.
So do your research, folks. Don't blindly follow the advice of some random influencer on social media. What else should our listeners keep in mind?
Meticulous record keeping is essential. Keep detailed logs of all your crypto transactions, dates, amounts, the purpose of each transaction. It's like keeping a financial diary of your crypto journey. This will not only help you stay organized, but also be invaluable if you ever face an audit.
Like keeping receipts for everything you buy at the crypto grocery store. Good advice. And speaking of keeping things organized, what about the actual process of filing your taxes? Is there anything that can make that less of a headache?
Thankfully, there are some fantastic tools available to simplify things. Several dedicated crypto tax software programs can help you calculate and report your gains and losses accurately. These programs can even connect to your exchanges and wallets, automatically pulling in transaction data and generating the necessary tax forms.
So they're like your personal crypto accountants, taking the complexity out of crypto taxation. That sounds incredibly helpful. But let's face it, even with the best tools, sometimes navigating the world of crypto taxes can feel like deciphering hieroglyphics. What should listeners do if they feel lost or overwhelmed?
Don't hesitate to seek professional advice. There are accountants and tax lawyers specializing in cryptocurrency who can provide personalized guidance based on your specific situation. They can help you understand your tax obligations, make sure you're compliant with the latest regulations, and even represent you in case of an audit.
That's excellent advice. It's important to remember that you don't have to navigate this complex world alone. There are resources available to help you stay on the right track. Ultimately, it comes down to taking responsibility for your own financial well-being.
Absolutely. Knowledge is power, especially regarding crypto and taxes. The more you understand the rules of the game, the better equipped you'll be to protect yourself and avoid costly mistakes.
So stay informed, keep good records, and don't be afraid to ask for help when you need it. Those are the keys to staying safe and scam-free in the exciting but often confusing world of cryptocurrency.
Speaking of scams, there's a recent case that highlights just how complex these schemes can get, even involving tools we've discussed today, like privacy coins and mixing services. Have you heard about the case of Bruno Block?
Yes. This one sounds like something out of a spy thriller. Tell me more about it.
Well, Bruno Block, which is an alias, of course, is a cryptocurrency founder who was charged in December 2024 with a multi-million-dollar tax evasion scheme. What makes this case so intriguing is that he allegedly used a combination of mixing services and privacy coins to conceal his cryptocurrency transactions and evade paying taxes.
It really does sound like something out of a movie. But this isn't just a fictional tale, is it? This case underscores the challenges authorities face when these tools are used for illicit purposes.
Exactly. It's a stark reminder that while these tools can be used legitimately, they can also be exploited by those seeking to operate in the shadows. Bruno Block's case highlights the need for even more sophisticated surveillance and investigative techniques in the crypto world.
It's a classic example of the cat-and-mouse game between law enforcement and those who want to exploit the anonymity offered by certain cryptocurrencies. But while these cases involving elaborate schemes and high-profile figures are certainly attention-grabbing, it's important to remember that tax evasion in the crypto space isn't limited to just a few masterminds. That study we discussed earlier about Norwegian cryptocurrency investors revealed that non-compliance is actually quite widespread. What are the implications of that?
You bring up a crucial point. Those findings paint a concerning picture. Widespread noncompliance suggests a significant lack of awareness or understanding regarding tax obligations within the crypto community. And it could have serious consequences down the line.
What do you mean by that?
Well, as authorities step up their efforts to combat crypto tax evasion, those who haven't been reporting their crypto activities, even if it's out of ignorance rather than malicious intent, could find themselves facing hefty fines or even legal action. It's a wake-up call for everyone involved with crypto, regardless of their level of expertise.
So ignorance is not a defense in this case?
Not at all. It's always better to err on the side of caution when it comes to taxes.
I agree. Don't wait for the tax authorities to come knocking. Take proactive steps to ensure you're in compliance. That's sound advice.
Thanks. I think it's important to remember that the world of cryptocurrency is still relatively new and the rules are constantly evolving. The best thing anyone can do is stay informed, do their due diligence, and not be afraid to seek professional guidance when needed.
Well said, folks. That brings us to the end of another deep dive into the world of scams. We've covered a lot of ground today, from the basics of crypto tax evasion to the sophisticated tools and tactics being used to hide assets. But remember, the landscape is constantly changing, so knowledge is your best defense.
Absolutely. Stay vigilant, stay informed, and most importantly, stay safe out there.
Before you go, be sure to subscribe to Scamwise so you don't miss out on our future episodes. We'd love to hear your thoughts on today's discussion, so feel free to leave a comment below. And for even more tips and deep dives into the world of scams, check out our YouTube channel. Until next time, stay Scamwise. It's mind-boggling how quickly things change in the world of crypto, isn't it? One minute we're talking about cute dog memes, and the next it's high-stakes tax evasion.
It certainly keeps things interesting, and it underscores the need for everyone to stay informed and aware.
You're absolutely right. Speaking of staying informed, I think it's time to shift gears a bit and offer some practical advice to our listeners. We've talked a lot about what scammers are doing, but what can everyday people do to protect themselves and make sure they're not accidentally breaking any tax laws when it comes to crypto?
That's a great question. First and foremost, I'd say don't be afraid to ask for help. There are so many resources available now, from crypto-specific tax software to experienced accountants and lawyers who specialize in this area. There's no shame in seeking professional guidance, especially if you're feeling overwhelmed or uncertain about your tax obligations.
It's like having a financial Sherpa guide you through the treacherous mountain passes of crypto taxes. Love that analogy. What else can our listeners do to stay on the right side of the law?
Well, as we mentioned earlier, meticulous record keeping is absolutely essential. Every crypto transaction should be documented. Dates, amounts, the purpose of the transaction, everything. Think of it like keeping a detailed travel journal for your crypto journey. This will not only help you stay organized, but also provide valuable evidence if you ever face an audit.
Makes sense. It's like keeping receipts for all your purchases at the crypto supermarket. You never know when you might need them.
Exactly. And speaking of receipts, remember those crypto tax software programs we talked about? Those can be lifesavers when it comes to filing your taxes. They can connect to your exchanges and wallets automatically, pulling in all your transaction data and crunching the numbers for you. It takes a lot of the guesswork and headache out of the process.
They sound like a dream come true for anyone who's ever struggled with a complicated tax return. But what if, even with all the right tools and resources, someone still feels unsure about their crypto tax obligations?
That's when it's time to call in the experts. Don't be afraid to reach out to a qualified accountant or tax lawyer who specializes in cryptocurrency. They can walk you through the intricacies of the tax code, clarify any gray areas, and make sure you're dotting all your I's and crossing all your T's. Think of them as your crypto legal dream team ready to tackle any tax challenges that come your way.
That's a great way to put it. Remember, folks, you don't have to go it alone in the world of crypto taxes. There are plenty of professionals out there who can help you navigate this complex landscape and make sure you're playing by the rules.
Absolutely. And let's be honest, the rules can be confusing even for experienced investors. The crypto space is constantly evolving, and the regulatory landscape is always shifting. The best thing anyone can do is stay informed, stay curious, and don't hesitate to ask questions.
Well said. That's such an important point. It's all about taking ownership of your financial well-being and seeking knowledge to make informed decisions. All right, folks, that brings us to the end of another deep dive into the world of scams. We've explored the dark side of crypto, uncovered how scammers try to evade taxes, and equipped you with some practical tips to stay safe and compliant.
Remember, knowledge is power. The more you understand about how crypto works, the better you'll be at recognizing and avoiding scams.
Absolutely. Stay vigilant, stay informed, and most importantly, stay scam-wise. And before you go, be sure to subscribe to Scamwise so you don't miss out on our future episodes. We'd love to hear your thoughts on today's discussion, so feel free to leave a comment below. And for even more tips and deep dives into the world of scams, check out our YouTube channel. Until next time, stay safe.